time for us to go through a real case to see how to face the real market challenge. The usual question in your mind is, in a weak market, when I see sharp corrections, should I average down the holding cost of my favorite stock? I will use our drill investment methodology to answer fully to the question. I will explain the essential investment skills that need to put into actions. There are a few problems need to get an answer. Later we will use Amazon as the example. So the first question usually is, should I average down my holding cost if my holding cost is 3138? Before we can get the real answer, we should use all the information we have on the stock, adding new assessment under different scenarios, together with our absolute loss tolerance, then we can get the answer. Second most frequent question is, what's the current view of the stock? What are the possible price under these scenarios? We will need to reassess the stock prospects using our own valuation skills and methodology under different scenarios. Drill investment process is employed to assess the long-term process of the stock in this illustration. Have you set absolute loss and exposure limit to this single stock exposure? We will use fundamental analysis if we like the stock to determine the second or third or the fourth tranche of entry price, that is the buying price of the stock, to average down the cost. An absolute loss limit should also be set at the same time. How much should I buy? Again, we will get the answer through the scenario analysis in the coming slides. So let me briefly talk about the drill investment decision-making process so that you can get a better sense before we go into deeper analysis. First, stock investment assessments. As we said, we should reassess what we have think about the stock initially, and then we should review the investment rating subsequently, whether it should classify as a buy, sell, or hold, and then we should determine under different scenario, good, base, worst case scenario, the possible stock price. Then we have decided our absolute loss limit and how much we want to have the exposure limit on the single stock or on the asset class. Then we use the optimized technique to get the investment plan, and then we take actions. Firstly, we talk about the investment assessments on the equities. We use an example of only 3 stocks, but our assessment grid have 7 subgrids. Let's go through one by one. How we see the stock perform since we own the stock. Then we assign score. You see the yellow highlight from +2 to -2. The second subgrid is, are we correct with our previous decisions? Then we see how long we have hold the stock, and then what is our original target holding period. Then we go to the current investment view subgrid. We should decide whether the stock market condition now belong to a bear category bull category, and what is our current sector view, and also what is the current view on the stock. Then we put these subgrid scores onto free stock, assuming our equity portfolio only have 3 stocks: Tencent, Alibaba, Apple. Then we add all these 7 subgrid score together to arrive at a final score for a single stock. Then we have a range of stock score. So we have listing all these stock score with the stocks together and match it with our scoring table to decide whether we should buy, hold, sell, lock in profit, or accumulate at the moment. So you can see this table is from -10 to 12. So for 7 to 11, it should be a buy, and we expect larger than 15% absolute gain. And at 12, very likely you should think about whether you need to lock in profit. Then from 7 to 2 is a buy. 1 to -5 should be hold to sell. -5 to -9 should be a sell. And -10, you should think about whether you should buy at the low point if you still think the stock have a long-term prospect. So then after you have decided your risk tolerance, what is the absolute loss limit, and then together with the reassessment of the stock price movement with the fundamentals, you can put in the table as shown. So under 3 different scenarios, assuming the stocks are equal weighted in your portfolio, and then roughly we get a -17% downside in a very bearish scenario, then we use this bear case downsides to translate back into the total portfolio that you should have under a bear case scenario. And for prudent investor, I always assume they should take this most conservative approach, and this should be your maximum total equity exposure for your portfolio as a whole. So more words about the equity price change under the 3 scenario. You should use your fundamental stock valuation methodology, like the growth, price, relative to EBITDA, earnings, book value, or together with the technical indicator for the short run to set the re-entry price. And also you can consume the investment advice from various sources that you have that you think highly. Then we can get something meaningful. Okay, now let's get into a real life situation so you have more idea what I have just told you. We use Amazon as the real case. The initial target price is 3,700. We bought it at 3,138, and we see the stock price have corrected, and we are setting the stock price possibly under different scenario for us to get back into the stock. And of course, we think highly the long-term prospect of the stocks. That's why we have that sort of exercise. In order to get more reasonable results, so we should make up some statistics, some numbers for us to consider. Remember, our holding cost is 3,138, the purchase price as shown in the table, and our original target price is 3,765. The first question we have is why we do not lock in the profit when the difference between the target price and the real life market price is only 2%. That is something that we need to reflect ourselves. Anyway, let's look at the worst case scenario. The price at the worst case scenario need to up 59% for us to break even. What it means? It means that from the beginning you buy the stock, you think you have a 20% upside. Now you have better upside because the stock have corrected 39%. So are you sure that your initial assessment and all the investment rationale is still valid at this moment of time? You need to rationalize and reconcile the difference between now and then. Okay, but we assume that we think highly of the stock prospect, and then we use our own methodology that we have come up with few prices that we think should be attractive in the long run, and we make up our own investment. Okay, now we come up with 16 scenarios simulated under 4 plans. Plan 1, we intend to add 100 shares each time when we reach the second lower price target. The third addition will be the price going even lower, and the fourth time, again the market price even lower to what we have foreseen, and then we add 100 shares in plan 1, 50 shares in plan 2, 30 shares in plan 3, and 10 shares in plan 4. We also calculated the total capital committed with the market value, with the absolute loss, and also we add the implied upside with the target price that we originally have, so that we can see clearly after we are aligning all these scenarios into one table, so we can rank. So according to what we have calculated so far, so we list all the scenarios into one table, and then under different criteria we can rank it. So what we use, the first criteria for ranking, is the implied upside compared with the target price. The second criteria we use would be the absolute loss, which is like mark to market. And the third criteria we use would be the total capital committed. So that like an optimization with these criteria, we add the most important criteria that we would like to see our absolute loss mark to market at any time during these all scenarios below 100,000, and our total capital committed will be less than 500,000. Then we can arrive easily at number 15 scenario is something that we should look at. Okay, so let me remind all of you that our drill investment decision making process. So you should reassess the stock that in doubt, and then to come up with your investment ratings according to your recent review, and determine the target price, the re-entry price under different scenarios, usually 3, good, base, worst. Then add on with your absolute loss limit and the exposure limit on the single stock or on any asset class. Then you will come up with an optimized investment plan and subsequently action plan. Now let us conclude this video. The drill methodology just described is very practical and do not need deep technical knowledge in mathematics or programming skills. I highly recommend all conscientious investors adopt similar scientific methodology to enhance their winning chance with their own absolute loss tolerance limit. You need time, patience, energy, and right philosophy and methodology to perform better than others. Not easy and need efforts. Watch out again our drill investment philosophy and methodology video. Check out for upcoming videos on mortgage essence and how to do equity valuations. Thank you very much for your kind patience. Looking forward to talking to you soon. Thank you.